Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Market Movers, we will be wrapping up the week, and today is the market closer for the United States, as this is the day prior to the Independence Day, and tomorrow is the US Independence Day. So, for the US traders, this is a long weekend, and they will be having fun. Of course, they will have to take the precautions as well, as we are going through the coronavirus pandemic, and so we need to be careful. Now, moving to the data front, we got the PMI numbers for many major economies of the world, and to particular interest has been these Chinese services PMI and the composite PMI numbers, which we got earlier in the day. And this is the best reading since almost 2010. And this is showing kind of V-shaped recovery in the services sector in the China. And for the month of June, the China's services PMI stands at 58.4, and this is on back of resumption of the economic activity, and many of the businesses have started their operations, and they are placing new orders, and the footfall is also picking up. Composite PMI is also on the rise, but it is still tad lower, as the manufacturing sector has not picked up to that extent, but it is also in expansion phase. So both these data points are pointing to the expansion in the euro area, and also the other major economy, United Kingdom. We got these final PMI numbers, and these PMI numbers are also showing improvement compared to the prior month of May. And though most of the PMI readings, if we leave out the France, are in contraction phase. For the France, the services PMI as well as composite PMI are in expansion zone. Above 50 reading is considered expansion, and for other major economies, the Germany and United Kingdom as well as the euro area as a whole, it is still in the contraction phase, but not far off from the 50 mark, which is the deciding marker here between the contraction and the expansion phase. So on that count, things are looking promising, and I think it is fairly likely that in the month of July we will see the PMI reading entering the expansion phase, and we are not really far off from that goal either. So this is going to help the sentiments in the financial markets, and we have already seen most of the major equity indices have been rallying for quite a time now, and even this week there were bullish tendency in most of the major equity indices, and I think these sentiments are likely to prevail for at least considerable future till we see anything of particular interest, or you can say concern, which roils these sentiments. Now, moving on to the technical outlook, we will see the Dow Jones Industrial Average and light crude oil. Starting with the Dow Jones Industrial Average, this is the daily time frame chart, and it's been a while since we last took a look at Dow Jones Industrial Average. And here, for the DGIA, the 25,000 zone has been a strong support area, and we have seen this reversal happening closer to 25,000 twice. Even during the start of the week, we saw this sharp move on the downside, and then equally sharp reversal. And after touching the 26,000 zone, the Dow Jones is now consolidating around this 25,700 zone. And if we consider its fall, this sharp fall in the span of month, and then there is a rally starting from the levels close to 18,000. It has been a phenomenal up and down, you can say down and up run, and we are still little bit away from this prior peak. I think you can say even considerable distance needs to be traveled to touch the pre-coronavirus days highs, but even this rally is nothing less than impressive, and here this consolidation is still On the bullish side, of course, we have to consider now more closely the lower time frame charts like 4 hourly and hourly to see the trajectory. But on the lower side, we have this 38.2% Fibonacci retracement, which is likely to provide the support closer to 24,000, and we also have this consolidation phase support. So on the lower side, the Dow Jones Industrial Average indeed has support, and I think that is likely to keep its movement on the lower side bit restricted. Here, if we consider the 4 hourly chart, the things are not looking that promising, or you can say that bullish. We have this central pivot point coming into play around 25,000 zone, and if we consider the price action so far, say in this month, then the Dow Jones Industrial Average hasn't really been able to sustain the momentum above this central pivot point. And even in today's session, after making high closer to that, we are seeing renewed selling pressure, which has pushed the Dow Jones Industrial Average lower towards these day's lows, and even the regression curve is bending now on the downside as the gains got incremental and the price action tended to move in a sideways manner. So we have to be cautious now, and I think more closely we will have to see how it is spanning out in this hourly setup. So here, if we are going to take the decision, I think we will have to keep a close watch on this near-term price action. And here we have this confluence of 100 and 200 SMAs, and we have this crossover. But now the price action momentum has kind of you can say it has subsided, and the gains have got more incremental. Still, in yesterday's session, we saw this high being made, and then this reversal also happened, and now the today's session, we have seen these futures for the Dow Jones Industrial Average mostly consolidating in this sideways manner with support being there around this prior swing lows. So we have this support zone area. So unless and until there is a clear break on the downside below 25,500, we can't really take a short selling bet. So it's a difficult call at the time being. And I think since the US markets are closed today, and then we will have the early Asian trading session and then European trading session as well. So by the time we get back to business during the US trading session on Monday, we will have the fair bit of idea of how things are likely to shape up in the next week. And we are not really concerned about finding a new trading opportunity in today's setup in today's session. As I have named this session, it is kind of weekly wrap up, so we are more concerned with how things have shaped up this week and what lies in store for us in the next week. So from that count, we have to watch out. We have to keep a close eye, as I said, on these prior swing low areas, and also now that this crossover of SMAs are bullish on the bullish side, we shouldn't really be looking for short selling either. So here, unless and until we see a break, there is not much to worry about, and the near-term outlook still remains on the bullish side. And looking at the consolidation during the early hours of Monday's trading session, we will have a fair bit of idea whether to go long or whether to sit on the sidelines. So we can decide accordingly. Now, moving on to the light crude oil's technical outlook, we have some bickering on the OPEC Plus bloc, the oil cartel, and there one of its member, the Angola, is kind of having some doubts regarding its output quota, and it wants to ramp up the production, thinking it hasn't really got a good deal. But even that turmoil hasn't really caused fresh concerns. We have not really seen strong selling on the light crude oil, and that gives us some hope that given the fact that most of the countries are opening up, at least to some extent, we are likely to see this demand for the light crude oil is going to only increase in the coming weeks or coming months, and unless and until we see a fresh rise in cases, we are pretty much on track to see this rise sustaining for at least a foreseeable future. And because of that, the prices have also rebounded, and now it's been almost a month since the light crude oil prices got here closer to 40 zone, and since then they have been hovering closer to this 40 zone. Of course, there has not been a significant movement on the either side. It has been kind of range bound, but nonetheless, the direction, the trajectory has been on the higher side, and that still holds well. So, from that count, I would suggest that we continue to hold on to the long position unless and until we see the break in the price action in the tendency, the underlying tendency, which is fairly bullish at the time being. So if we have to watch out for the deciding marker, then I think this central pivot point, which is just tad below this 39 zone, is going to be of crucial importance for us. And unless and until there is a fresh break below this zone, I would suggest that we continue to look for the long opportunities, the buying opportunities for the light crude oil, and I am pretty much optimistic regarding the possible break on the higher side, even beyond this immediate swing high, which is there around 41.64. So unless and until there is a break below this immediate support zone on this 4 hourly chart, we don't really have to worry much. Of course, any entry for the long side, I would suggest needs to be kept closer to the support zone. So if we get any entry closer to 39 after due consolidation, nothing better. But right now the price action is not really close to that zone, so it is still around 40. So we have to act with prudence and see what lies in store for us. So here we have this support zone, as I tried to underline in while explaining the 4 hourly chart as well. We have these prior swing lows, these consolidation phase lows, which have been closer to 39. Here even this immediate swing low is just little above 39. So I would suggest that if we get fortunate enough, if we get a fresh break on the lower side, and if we see that price action is consolidating closer to this support zone, then I would suggest that you should get involved on the long side and try to see if we can profit from such a possibility. Right now, the price action is there around 50 SMA, and it is still bullish, but the only thing is that the risk reward ratio is not that favorable, and as I have already said, it is the US holiday, so not much price action is likely to unfold in today's session either. So, taking both these factors in account, I would suggest that you see what kind of open we get during the Monday's early hours, and then you can think about going for a long position or maybe sitting on the sidelines. I'm not really in favor of going for a short sale, so that's why I'm not saying that we should be looking for any opportunity to go short. Rather than that, I would sit on the sidelines if things don't look promising enough. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous weekend ahead. Enjoy the Independence Day holidays as well. See you on Monday. Goodbye.